Hi, I'm Scott Shellady, otherwise known as the Cow Guy, here in London at the CME Group, talking about bonds. Let's talk about the 10-year. Maybe the next time I do this, we're going to talk about something a little shorter dated, but still a lot of the world's looking at that 10-year. Hey, we got through 3%, didn't we, right? A little bit, we're on the 3.03% level before things have kind of tumbled back down to earth here, 295, 296 as we go to tape. What's significant about that? Well, that's the highest level we've had since basically the end of 2013, beginning of 2014. So that's almost, that's a good solid 4 years since we've been at those levels. We touched them. Now we're going to have to start to see economic numbers come in from behind and support that. And you know what? We're starting to get those. It is still all about the numbers. That's what traders look at. And we've seen some inflationary aspects kind of start to seep through the system. And I think that, one of them is going to be a driver, which is oil. Oil having rallied higher is going to make a lot of things more expensive, not just what we use at the gas pumps. Oil is in a lot of the things that we buy, right? So keep an eye on that. And we had some metals kind of take off us, not all of them, but a few of them take off on us as well. So with an oil rally, those numbers are coming in a little hotter than expected. So inflation creeping in, it's still not getting away from us, though. That's one thing to know. And then lastly, something I'd like to call Fed expectations, right? Expectations of the Fed. It's caused shorter-term money, not as much the 10-year, but shorter-term money has gotten a little bit more expensive because of what the Fed may or may not do as far as raising interest rates 3 or 4 times this year or what have you. But I still think that that's got a lot to do with keeping that 10-year buoyed. Maybe not as much as the front, but definitely is something that's kind of keeping that 10-year from going too low. So Fed expectations also kind of an underlying support in that market. So that's it from me. Those 3 things are kind of interesting. We'll see where we go from here, but we're hovering, waiting to see the next move. I'm Scott Shellady, otherwise known as the Cow Guy, here in London, talking about bonds.